Good morning, good afternoon, and good evening, friends. So, we will discuss about Unit 2 in Chapter 6, Sale of Goods on Approval or Return Basis. What is sale of goods on approval or return basis? For that, we should first understand what is a sale, right? A sale in a normal course is what is a sale? Sale is transfer of goods from one person, one person to another for a consideration, right? So we have seen this in Sale of Goods Act. Probably you could have studied that as part of your uh, law paper in CA as well as in CMA Foundation, right? So if you require any clarification on that, also please send an email to me. I can clarify that because I'm teaching law classes as well for certain students. So coming back to this, what is a, no, a sale? Sale is a normal transfer of goods from one person to another person for a consideration, right? And this is in the normal course of business, and this is in the normal course of business, right? So, and however, when a businessman or when a promoter wants to increase the sales, right? When there is a requirement to increase the sales, what all the things that the promoter or an owner will do? Like they can do it for a marketing campaign, they can like a marketing campaign and etc. can be done. Or the other option is people, the manufacturer or the wholesaler will send the goods to the retailer on sale or return basis, right? So it normally happens from this, like this: manufacturer or wholesaler, they will send it to retailer on sale or return basis. Sale or return basis. What does it mean? The retailer has to sell the goods, right? The transaction, the ownership does not pass on to the retailer. The ownership still lies with the wholesaler or the manufacturer. Only the possession is transferred, right? See, if the retailer is unable to sell the goods, or the retailer finds the goods are not satisfying, the retailer can send it back to the wholesaler or the manufacturer and say that thank you very much, this goods is not for up to the mark, etc. We probably, most of us could have seen this in the online transactions, right? Online transactions nowadays give the option to return the goods back to the say, like if you are purchasing it from any of the online platforms like Flipkarts or Amazons or Snapdeals or whatever it is, right? So when we purchase goods from the online platforms, they also give the option to return the goods subject to certain terms and conditions, right? So that is a classic form of classic example of sale of goods on approval or return basis. Like example, let's say example is online purchases or online sales. The salient feature of this is like possession gets transferred from seller to buyer, whereas ownership ownership does not get transferred till the lapse of certain time or the acceptance of the buyer, right? Till the time the ownership does not get transferred, right? Even though, like, this is one example. Even though money is also paid by buyer to seller, seller gives time limit for buyer to return the goods, right? This we normally see in when we do some online transactions, right? So the customer does not incur any liability when the goods are merely sent to him, right? So customer does not incur any liability when the goods are merely sent to them, because the customer will have an option to return the goods anytime, right? So when we consider this with respect to the Sale of Goods Act also, when Sale of Goods Act says like the sale will take place or the property and the goods pass to the buyer when the buyer signifies approval or acceptance of the sale of the seller when he does some act signifying or adopting the transaction, like for example, when the buyer is sending say 10 kilograms of rice to the uh, when the seller is sending 10 kilograms of rice to the buyer and the buyer has not given his approval, given their approval, but uses that rice to cook food for his home, obviously then it isn't deemed acceptance, right? So the if it does not signify his approval or acceptance to the seller, but retains the goods without giving any notice of rejection within a reasonable time, or uses the goods for any purpose, then it is called as deemed acceptance as per Sale of Goods Act also, right? So that is what we are seeing here. Possession does not get transferred to the from seller to buyer. Ownership does not get possession gets transferred from seller to buyer. Ownership does not get transferred till the lapse of time or till buyer signifies his acceptance through any means, or even though the money is also paid by the buyer to the seller. Seller gives time for the buyer to return the goods. So customer does not incur any liability when the goods are merely sent to them, right? So this can also be seen in the Sale of Goods Act, where we have seen like where we could have studied about the deemed acceptance, etc., etc., right? Sale of Goods Act 1930. 1930. There are certain accounting entries that needs to be. There are three types of sale of goods on return or approval basis, right? There are three types. Three types of transactions. First is a casual transaction. Casual transaction is a normal sale, right? When the buyer makes payment and the seller handovers the good, etc. Obviously, there will be certain timelines for return of goods, etc. Right? Casual transactions. And the second one is the second set of transaction is frequent transactions. Sorry, missed it. Frequent transactions. So there is not a major difference between a casual transaction and frequent transaction. Only the difference is the number of transactions will be more very frequently, probably say every alternate days, every week, or regular purchases, etc., etc. Frequent transaction means regular purchase or sale from the parties, right? And then the next one is numerous transactions. This is very significant transactions that happens. So where in this case sales or returns daybook or as sales or return ledgers are maintained, right? In the case of frequent transactions, what are the things that needs to be maintained is like uh, a register which says that goods sent on approval, goods sent on approval, goods sent on approval. Then the goods, once it is sent on approval, it has to be accepted as well. So where the goods will be sent on goods sent on approval, right? Goods sent on approval. Then the buyer has to return or accept the goods, right? And the balance to be retained by the buyer. So the record has to be maintained, and probably a register or and some form of record has to be maintained in case of frequent transactions. Now get back to the journal entries. Like let's look into some what is the basic journal entries what we have to see in case of or the accounting records. This is very simple to understand actually. We don't have to spend too much time on understanding the accounting record. This is like when sale is made. When sale is made, normal sale transactions, the debtors account debit and sales account credit, right? Sales account credit. And when the goods are returned or rejected, when goods are returned, then obviously reversal entry, sales account debit, and debtors account credit. Then then this will be at what? Yeah, this is more important. This should be at transaction should be recorded at invoice price. Invoice price. Then next set of entries that has to be processed is when the goods are accepted at a higher price. Like we are sending um, we are just giving a pro forma invoice, and then the buyer is seller is giving only a pro forma invoice. When the actual invoice comes in, the goods value is higher. Then if that's the case, if goods are sold at higher price, then again another entry for difference, which is debtors account to sales account when the goods are at higher price, and this again will be the differential price. Differential price when goods are sold at lesser price. When goods are sold at lesser price, then it is sales account debit to debtors account credit. Debtors account credit for the differential price. Now there is one significant one that will come in here. What will happen to the balance goods? In the case of sale or return basis, there are certain time limits. We saw that the buyer can return within the specified time limit or reasonable time limit. What will happen if the goods are sent on sale or return basis on the year end? Let's say the year end is 31st March, right? And the goods are sent on 31st March or goods are sent on 30th March, right? With an option to return, say in a week's time, etc. The buyer will have the option to return. So on the year end, the goods are still not sold. Assume that the goods are not sold. What will happen? What will happen? So let me explain it into the through an example. Right? We are talking about balance goods now. Balance goods. Say sale quantity is 100 and buyer has already sold 50, right? And here in this case of time limit to return has not expired. Like we are sending it on 30th March and then with an option to return it in week's time, and it is on 31st March year end. So we have, what is the entry that we have to process for the year end? Sale quantity is 100 on 30th March, right? Buyer has already sold 50 on before 31st March, and buyer has returned 20 on 30th March itself. On seeing the goods, buyer has returned 20 goods, right? They don't require. So there are still balance goods will be 30, right? 100 sent, 50 already sold, and 20 returned. The balance goods will be 30. So what will be the entry that has to be processed? Year end. Year end entries. First entry is reverse the sale. Reverse the sale, right? Sales account debit to debtors account credit, invoice price for balance goods. Now, this balance goods have come back to the goods. So this has to be treated as an inventory. Balance goods, what is returned by the buyer, has to be treated as inventory in the books. This return has happened before the year end. Okay, so the balance goods we have to treat it as an inventory. For return goods, normal sales return entry, right? If the goods are returned, sales account debit to debtors account for the invoice price for the sales, the buyer returning goods within the year end. We're talking only about the goods pending with the buyer, and the buyer has got time to return the goods probably after a week or 10 days time. What is the entry that we are going to process for the balance goods? The balance goods, first of all, has to be treated as sales return, because the buyer can return the goods and this is still not recognized as sale. We cannot recognize this as sale because buyer can return the goods anytime, right? So this has to be reverse. Sales of for this 30 has to be reversed at the invoice price. Then we have to take it to the inventory now. So inventory on uh, inventory of these goods. Next entry. So inventory of sale or return goods, debit. Inventory of sale or return goods, debit to trading account. Yes, this should be shown as trading account as part of the closing stock, and this should be at the cost to price. This should be at the cost price. If the invoice price is less, then obviously costs are invoice price, whichever is low. So it should be shown at cost price. Okay, the balance goods, I'm repeating again, the balance goods has to be treated as return because the buyer has got time to return the goods. If the buyer has got time to return the goods at the end of the year, the balance goods has to be treated as sales return because it is still not sale. Then the goods which has got treated as balance goods which has got reversed in the books has to be moved back to inventory by debiting inventory on sale or return goods to trading account, and this should be taken as part of the closing inventory in the trading account. Okay, hope the students are clear on this. Like I'll explain it one more time in the next class when we go into the illustrations. So just in case you have any queries or doubts, please come back to me and please send an email to me at babupriya@rediffmail.com. I'll come back to you with any doubts or clarifications that you might have. So this is very easy and simple chapter to close. So let's try to see how fast we can close this. Have a great day, students, and please let's connect in the next class.